Is it hard for you to find talent this year? Like when you're looking for any C-level positions, is it hard to find technical talent for them?
They're both difficult to find. I think good people are very difficult to find. A lot of companies, I think when they get to a certain size, a full-time recruiting resource is a very good investment. Talent has definitely been, like I said, it's the number one challenge that all of our companies are facing, both on the management side and on the technical side.
Welcome to this episode of Sunny Silver Linings. Joining us today is Ramsey Sahyoun, co-founder and M&A partner of Evergreen Services Group. Ramsey shares a PE perspective on the MSP channel as it relates to talent and some of the key talent issues he faces in an M&A situation. Ramsey also shares with us the talent trends he sees in a PE environment that may be different from a privately held MSP. And remember, if you enjoy content like this, be sure to subscribe, like, and share. Now, here's your host, the founder and CEO of IT by Design, Mr. Sunny Kela. Over to you, Sunny.
Hi, Ramsey. Welcome to the show.
Thanks for having me, Sunny.
Yeah, so thank you for taking the time to have this channel conversation with me. You have been in the channel, a thought leader, an entrepreneur, I will say serial entrepreneur, and a very different entrepreneur making a lot of impact, not only on this industry, but overall you're changing the game. And I think you are the first few that started rethinking the MSP space and doing things differently as an entrepreneur. Yeah. And I'm really excited about having our conversation today.
Me too, Sunny. Well, you've made a huge impact on the channel as well and building your business. So really excited for the conversation today.
Yeah, thank you. So I want to start with sharing your journey. I know you were part of HTG back in the days. So how did you get into MSP, first of all? And then how did you get into the overall thinking that you had with Evergreen?
Yeah, so I started my career in private equity and was working at a company called Alpine Investors, which is a private equity firm here in San Francisco. Loved Alpine's approach to private equity. It was very people-oriented. It was focused on growing businesses to generate investment returns. And then right around that same time, we started to learn about the MSP space. And the biggest kind of change in the industry that got us interested was the shift towards proactive managed services and towards the monthly recurring revenue model, both on the services that MSPs deliver, but also the products that MSPs sell are now on this recurring subscription basis. And so that in 2017, we initially acquired a company called Wolf Consulting out of Pittsburgh, and they were longtime members of HTG, which is now IT Nation Evolve, obviously. And that sort of got us exposure to this broader community of MSPs. So fast forward to today, we've acquired over 60 MSPs, and it's been a really good investment for us. So that's kind of the background.
Yeah, it's a very interesting model, that long-term home for entrepreneurs, where they probably get best of both worlds. They have more access to capital, and they can also live their purpose and create their entrepreneurial freedoms, that you can call it, could be purpose. Because one thing that I know is a lot of MSPs where they did not see this coming, they did exit their business when PE money came in. And now they are like, I just don't have a purpose in life.
Yeah.
And so my question to you is, I want you to explain it to our audience. How is your model different than a typical PE model? Can you simplify this for us?
Definitely. Yeah. I would say there are two key ways that our model is different. The first is the what I talked about around buying and holding versus buying a company and with an eye towards reselling it in 3 to 5 years. That's a fundamental difference, and that is really why we started Evergreen, was to pursue that vision. The second thing that makes us unique is that we have a decentralized operating model. So most of the MSPs that we by continue to operate independently post us acquiring them. So, the brand doesn't change, the service delivery model doesn't change, the people don't change. We operate the business, as it was operating before. Obviously, we try to help improve the business and make it better and grow it faster and help everyone achieve their goals. We do that in kind of a decentralized operating model. And you use that term entrepreneurial spirit. That's the biggest reason we've taken this approach that we have around the decentralized operating model, because MSPs are driven by entrepreneurs and entrepreneurial people that feel a sense of ownership over their company and they identify with it. I think a lot of times when you try to merge companies together that might not fit, and you try to take two companies that on their own are good companies and you try to put them together, I think there can be a lot of pitfalls in that. So we try to buy good standalone MSPs and help them, be the best version of themselves and over the long haul. So I would say those are kind of the two biggest differences between us and kind of the more traditional private equity model.
Yeah. So what I'm hearing you say is that here, if there is a MSP who is interested in selling, they get to keep their purpose. They get to kind of continue to work in that business. Their team members that are making that success happen, they stay in the business as well. So my next question to you is, what are the pros and cons that you see between this model? So if there's a MSP who is thinking of kind of exiting their business, where they are trying to make a decision, should I take this Evergreen path or should I take this other typical PE path? What are the pros and cons that you can share with them so that it's easier for them to choose the right path?
In our model where the business continues to operate independently, oftentimes when someone gets a cash payout for their business, they don't feel the same kind of sense of motivation, even in a decentralized model. They have their entire net worth on the line. They own 100% of the company, and they get a check for their business. When they close the deal, they lose a lot of motivation. So a big part of what we do, honestly, is we understand that and embrace that. And so we bring in a new CEO into a lot of companies that want to sell the business and they want to transition out of it. So a company that actually wants to be merged into a larger company and change how they do things to adapt to the larger company. So we've worked with a number of business owners who wanted to go down that path, and that we find more often than not, people, again, want to feel that sense of autonomy and want to remain independent even after selling their business. But in cases where somebody wants to be a part of a bigger company and sort of adapt how they're doing business to fit that company, that's more of the traditional private equity model.
Mm-hmm. So what I'm hearing you say is that in this case, the seller, they're not required to stay in the business. You can bring in a new CEO, but do you give them an option to stay as well?
We do. Yeah, we definitely give them an option. I would say, though, in the majority of cases, people want to sell to us and transition out of their business, but they want to see their legacy and their business live on. And that's been true from our first acquisition, Wolf Consulting. So that has been kind of the prototypical acquisition for us, someone that wants a path to transition out of their business, but they want a good home for it.
Yeah. So now let's talk about the overall economic conditions, and especially this last weekend or so, with the bank collapsing and a lot of some new waves are created as well.
Yeah.
Yeah. So I want to talk about the state of the PE in the channel, in the MSP channel. Do you see the momentum still there? Do you see multiple changing? Do you see your carry cost going up? So what are the key things that you're seeing this year that are different than last year?
Yeah. But first of all, I think private equity is great for the channel overall. If I think back to 5 or 6 years ago, the options for business owners to monetize their business are just night and day. That opportunity didn't exist to nearly the same degree as it exists today. So overall, I think private equity is positive for the channel. Generally speaking, as interest rates go up, the valuations of businesses come down. So we've seen some of that, as interest rates have gone up over the past, 6 to 12 months. We've seen a little bit of a cooling in the market as far as valuation multiples, because the interest on the debt that's taken on to buy those companies has gone up. So the cash flow from an acquisition is not the same as it used to be to the investors. So that's one trend. At the same time, there are a lot more private equity-backed MSP platforms out there looking for acquisitions, and there's still a lot of capital just in the private equity market in general looking for privately owned businesses. So there's still ample opportunity for business owners that want to look to exit. There are a number of buyers out there. I just think multiples have come down because it's changed the calculus a little bit with higher interest expense.
So interest rate rising, that means the multiple that you used to get, you may not get this year.
That's right. Because when interest rates are low, investors need to look for other alternatives to get a yield on their money. And one of the alternatives they go to is paying higher prices for businesses, effectively accepting a lower return on their investment. So when interest rates go up, it has the opposite effect.
Yeah. Now, so let's talk about talent a little bit, because IT by Design is the talent authority in the channel. So when we do provide talent trainings and the talent platform. So how do you see talent situation now for your companies, Evergreen companies? How is the talent market changing this year, or what is the state of talent in your companies?
Yeah, so we talked a little bit about management talent and some of the trends there as far as when we're bringing in a new CEO and how we go about that. But on the technical side, really ever since we've been investing in the space, which is over 5 years now, talent has been the number one challenge. So when you talk to any one of our CEOs, it's finding and retaining great people is their biggest challenge. When we were doing some of our first acquisitions, and we had talked to some MSPs that had employees offshore and that had maybe more of a remote culture, that was dismissed, I think, by most people in the industry as far as that was something that they sold. They would sell against a company like that in the sale process. And I think now you've seen just a lot more openness to alternative ways of doing the work, whether it's an outsourcing partner or just hiring people in different areas of the country, in different areas of the globe. So that's been a huge trend that is just becoming a lot more widely accepted than it was just 5 years ago. And it's been really interesting to watch. And again, I think it's been a positive development for MSPs. You go from your pool of potential employees being the people in your city to now the pool of potential employees being everyone in the world. And that's really can only be a positive as far as the impact on the MSP business.
Yeah. From the trending point of view, is it hard for you to find talent this year in reference to last year, or is it easier? Like when you're looking for any C-level positions, is it hard to find technical talent for them?
Yeah, I think for both, they're both difficult to find. I think good people are very difficult to find. We've invested at Evergreen in building out a recruiting team, primarily focused on senior management hires, but they can be thought partners to companies as far as recruiting as well. A lot of companies, I think, when they get to a certain size, a full-time recruiting resource is a very good investment and can often, more than pay for itself. Talent has definitely been, like I said, it's the number one challenge that all of our companies are facing, both on the management side and on the technical side. I don't think the difficulty has changed much over the last year or so, but it's certainly kind of coming out of the pandemic got a lot more difficult. And I think, there was obviously a lot of upward pressure on wages that was challenging for a lot of our operators. And it's been a trend, but I think the level of difficulty is leveling off a little bit with some of the economic challenges.
Yeah. And I was just talking to one of our partners who happens to be Evergreen company. They're somewhere from Florida, and the overall perspective there was that a lot of companies from like California to like they have never seen this type of talent demand, or especially what people are asking for in terms of raise, in terms of, because there is a lot more competition, right? So it's while COVID brought an opportunity for Bay Area type of companies or MSPs where cost of talent was very high and they never explored the idea of kind of having a remote worker, while it's helping the company where the talent cost was already high because of the metropolitan type of neighborhood.
Right.
But some suburb MSPs is a big challenge where companies come in, they throw 30-40% extra, and then the person who is getting that opportunity have to decide. And so it's like a pro for some companies and pro for some markets, I should say, and it's kind of a con for some markets.
Right.
Well, last question, Ramsey, which is, who is your ideal customer profile when you're looking at companies to buy? So what do you look for? Like, who is that ideal candidate for you when you're looking at MSPs to buy?
Yeah. So there are a number of things that we look at, but first and foremost, like I said at the beginning, our approach is to buy good standalone businesses. So we don't look for companies that are in distress or underperforming or struggling with revenue growth. We look for good companies. So growth is a critical part of it. I would say our sort of ideal MSP is, a company with north of 5 million of revenue, north of $1 million of EBITDA. We will go as small as 3 million of revenue and 500,000 of EBITDA. But kind of the ideal company is that 5 to 10 million revenue MSP that's growing, that's very successful, that has a good culture, and that importantly takes care of their existing customers. So about 2/3 of revenue growth in most MSPs we see comes from the existing customers. They're growing, they're adding users, they're buying new cybersecurity or cloud solutions. And so about 2/3 of growth in most MSPs that we see comes from existing customers. So we look for companies that are really good at retaining and growing their existing customer base. And there are a lot more factors kind of beyond that in the diligence that we do, but at a high level, our ideal company is kind of that 5 million plus revenue MSP.
Yeah. So if I'm listening to you, this is a bonus question.
Okay.
Just from the best-in-class MSP's point of view, if you could only give one piece of advice, what is your advice to that MSP entrepreneur?
Oh, man. One piece of advice, if I had to say one piece of advice, I would say get in the habit of regularly increasing your prices for your services. I think we see far too many MSPs that haven't changed their price in 5 to 10 years. If you don't charge your customers more for your services, it's going to really hamper what you can offer to your employees, and it's really going to hamper your growth. So I think pricing would probably be the biggest piece of advice, just because how common it is that MSPs are undercharging for their services. the other thing about growth that comes from raising your prices is it doesn't come with an associated cost. So as MSPs are thinking about how to increase their EBITDA and increase the value of their business, pricing is actually more effective than landing a new customer because there's no associated cost with a higher rate. So I think pricing would probably be my one big thing for MSPs that are looking to build their business.
Yeah, that's a great advice. Even our own partners, they don't have discipline behind regular price reviews and increase and overall looking at the client profitability and agreement, because sometimes there are child agreements from the same client, looking at client by client and agreement by agreement profitability. And then they struggle. I mean, that's a lot of stress on everything else. And then it defeats the purpose of being an entrepreneur as well, because sometimes you're too busy with other things and you don't take time to build a discipline for pricing. So that's great advice. Thank you.
You use that term discipline. I think it's so important. The best companies, they regularly do 3% price increases, and they get in the habit of that. They get their customers, on board with that. And as a result, they're able to deliver great service. And they also don't have to go back to their customers, every 5 years and ask them for a 50% price increase. So just that discipline that you touched on is it's the right terminology.
Ramsey, I appreciate your friendship, and your work in the channel is meaningful, it's a high impact. And just in a very short period of time, a portfolio of 60 MSPs, and you just started. So great job there, and thank you for coming to the show.
Thank you, Sunny. I really appreciate it, and appreciate all the work that you do, helping to educate the channel, and always enjoy seeing you out on the road, and looking forward to seeing you soon.
Yeah, see you at our Build It. You are one of our panelists.
Yes, can't wait. It's going to be awesome. Looking forward to it.
Thank you for watching Sunny's Silver Linings. Don't forget to like, share, and subscribe. See you next time.